The European Central Bank holds its latest meeting tomorrow amid growing signs of life in the Eurozone economy. The bank is in the process of buying some 2.3 trillion euros worth of assets, quantitative easing in the jargon, but following the pickup in growth, its president, Mario Draghi, has hinted it may no longer be necessary. Well, Nandini Ramakrishnan is Global Market Strategist at JPMorgan Asset Management and joins me now. So, Nandini, good to see you. Do you think Draghi is set to do anything tomorrow?
I don't think he's going to be starting anything new tomorrow, but he is going to be hinting at that reduction of those QE purchases. So those monthly quantitative easing, bond buying that they're doing around 60 billion euros a month is set to go down, or we expect it to go down starting in 2018. So we expect him to drop some hints, perhaps the timeline and range of how that's going to happen in the meeting tomorrow. Why
do you think it is that the Eurozone's recovery seems to have caught a lot of people out? I mean, they're doing much better than anyone expected, aren't they?
Exactly. Well, the Eurozone hasn't always been sort of the big growth place that was shooting the lights out. Let's say the US, UK growth has been a bit stronger even in the past few years. But now, looking at the data, you see unemployment coming down in the Eurozone, GDP growth at around 2% for the past several quarters, and a lot of other indicators showing strength across the region, not just one economy like Germany, for example, driving the whole region forward. You've got Spain and Italy pushing forward as well.
Quite ironic, given that they're the UK's biggest trading partner and we've just voted to leave the EU.
Indeed, it's going to be a difficult one as you see the Eurozone have that strength in the European Union, despite some of those Brexit negotiations that should come forward in the next few years.
So do you think when the ECB does get around to talking about this, are we talking about actually stopping its asset purchases or unwinding them?
Actually, the first thing that would happen would be stopping or reducing the asset purchases. We do expect that unwind to come much later in the future. So that's in contrast with the US Fed, Federal Reserve, who they are unwinding their balance sheet. We don't expect the ECB to be doing that anytime soon, as they're still in a sort of earlier stage of that economic cycle.
Because if they do, potentially it could be chaos in the bond market, create absolute havoc, couldn't it?
Chaos is a strong word. We do expect in the next few months definitely weakness in the Eurozone bond market, as you now have less demand from a large buyer like the ECB, but they are going to be messaging how it's going to be reducing slowly over the course of 2018. So a slow and steady reduction in those bond prices would be what we expect, more so than extreme chaos.
And most of the bonds, they're German government bonds by and large, aren't they?
Mostly German government bonds, French, Dutch as well. And of course, the big risk still, politically speaking, in Europe, in Eurozone, is Italy. And Italians have the largest amount of government debt. So we are watching that space a bit more closely.
All right, Nandini Ramakrishnan, it's good to see you. Thanks for joining me.